Sounds good. Thanks for having us out, everyone. Um, I'll give a quick introduction before I pull open the presentation. My name is Ryan Weidenhouse. I'm the manager of lending services with BOC Capital. As you guys are going to find out in a little bit, BOC Capital is a nonprofit CDFI, which we'll go into in more detail. But essentially what that means is we're a small business lender. We've been around for a little over 20 years now, based out of Brooklyn. We have a footprint in all 5 boroughs, kind of the greater metropolitan New York City area, do some lending in Long Island, 5 boroughs, and Westchester. And simply put, we work with small businesses of various sizes across different industries, doing loans as low as $500 up to $1 million. So I'll pass it to my colleague, Michelle, who's with me tonight.
Thanks, Ryan. Good evening, everyone. I'm Michelle McClyment. I am a business development officer at BOC Capital. I do lending. I'm a lending officer as well. I do lending for small businesses, just like Ryan. And Ryan, you kind of got into what we are at BOC Capital, so we work along on the same team.
Thanks, Michelle. So I'm going to share my screen. We got a presentation to go through this evening. And let's see. Can everyone see my access to capital slides?
Yes, we see you.
Right. So yeah, tonight we're really going to be talking about access to capital, some kind of tips about accessing capital across multiple lenders, but the presentation is going to mainly focus on what we offer and some of the things we look for. Like I said, I'm here today with Michelle. And then our agenda, we're going to go over kind of 3 words of the day. These words are, like I said, not necessarily specific to BOC Capital lending, just terminology that you should be familiar with. Some ways that lenders analyze loans and some phrases that you might hear over and over again. We'll give an introduction to BOC Capital, what we do in a little bit more detail, what a CDFI is, and what our mission is. And then we're going to talk about 2 kind of sets of loans that we do, term loans and contract-based loans. And we're going to give the examples of each and the differences. And then we'll kind of jump into loan packaging tips and general questions Q&A. So I'll pass it to Michelle.
Okay. So as Ryan said, we're going to start with 3 terms of the day. And these are just typical terms that you will hear throughout a lending process. Just to kind of, these are some terms that at the end of the presentation, you should kind of have some of these in your head just to remember that you've heard it before. And once you go through a loan process, you will continue to hear it. So let's start with the first one, community lender. So community lender, we are locally owned and operated financial institution. So unlike a bank, right? They address the needs of a community by offering loans to small business owners or personal loans to individuals, typically operating with significantly smaller assets. The appeal of a community bank is the social relationship it has with customers. So you will see on, you'll also see the sign for a lot of community lenders. You'll see CDFI, and that's what it means, Community Development Financial Institution.
So yeah, a community lender can kind of take a different forms. Small credit unions can be community lenders. Small loan funds can be community lenders. Even small banks can be considered community lenders. CDFI is a designation that you can keep your eye out for, Community Development Financial Institution. That's a designation from the Treasury that essentially a lender has to certify on an annual basis to say that they are a mission-driven lender and they're adhering to their mission.
Okay, our next term is going to be GDSCR. GDSCR stands for Global Debt Service Coverage Ratio, and it's typically the measure of the cash flow available from a borrower's personal income and business income, which is available to pay current personal and business debt obligations. For example, when an owner has a job outside of a business. So it's almost, I will get more into this a little bit later, but it's more of when you're looking at your personal income and your business income, and is that enough to cover your day-to-day expenses, your debt obligations, and have an excess? And Ryan will talk about that a little bit later on in the presentation. Our next term is cash flow projections. Cash flow projections is a cash flow projection shows the expected amounts of money that will come into and out of a business. It's about when the money comes in and goes out and how different variables will affect liquidity. So it's basically how are you getting money into the business and how money is going out and what that flow is.
Yeah. So cash flow projections, GDSCR, these are tools and methods in which lenders will evaluate how to provide capital to small business owners. So they're terms that you may hear again and again. And they're things that we help with as well, right? So we work with small business owners to develop cash flow projections to make sure that they're lending specific to be able to get through the lending process.
A little bit about BOC Capital. BOC Capital is a U.S. Department of Treasury certified, here we go, as the term again, community development financial institution with over 20 years experience lending to MWBE small businesses in the New York metropolitan area. So that's minority and or women business enterprises with a focus on contract-based lending for construction businesses. And we'll talk about contract-based lending. That's another, we have term-based lending and contract-based. Through advocacy and the combination of capital, training, and technical assistance, BOC Capital maximizes opportunity for economic inclusion. So through capital, affordable and flexible financing options, you'll see a few of those. Training and TA is technical assistance, where we actually not only help you with the lending, where we actually give you some tools like business plan assistance, credit counseling to help with your business needs and your challenges. Opportunity with the network of partners, we connect businesses to the resources and contract opportunities that they need to stimulate growth. So we have various programs that we are partnered with. And advocacy. In order to build inclusive local economies, BCC works in partnership with diverse communities to bring an end to systemic racism and advance economic justice to create a fair and just society for all. So we're equal opportunity lender.
Yeah, so you might hear this terminology TA that's thrown around a lot with community lenders, TA being technical assistance. It's very common for CDFIs to group the two. So not only just doing loans like a traditional lender would do, but trying to work hand in hand with the business owner to identify pain points in the business and work through them and provide assistance along the way. So we have a slew of programs that borrowers with us are eligible to access. Some of them are linking to contract opportunities. Some programs focus on financial management. Some programs focus on credit counseling, building business credit. And it gets as specific as going into programming about childcare businesses or starting up a restaurant. So we have a lot of different types of technical assistance that we provide along the way. And that's kind of what makes CDFIs unique.
BOC Capital is a community lender, as we said before. And let's talk about some of the small business term loans. So the purpose of a small business term loan is to provide low-cost financing as permanent working capital, purchase equipment and inventory, and general business expansion. Those loans will go anywhere from $500 to $250,000. The interest rate would be anywhere from 4 to 9.25%. The terms are anywhere from 6 to 60 months repayment. And your fees, your closing fees, 1.5 to 2% closing fees, are also always incorporated into the loan amount as well. Our small business term loans, as I stated before, is for working capital. Any business can come to us in regards to looking for working capital. You want to purchase an equipment, you want to purchase, let's say you're a restaurant, you want to purchase a refrigerator, a stove, you have a beauty supply business, you want to purchase inventory, anything, things like that, and general expansion if you're just trying to expand your business. So we'll get into an example of that in a little bit.
Yeah, so a term loan might be a term you've heard or not heard before, but a term loan is the loan that most people are familiar with, where you essentially take out a sum of money and you pay it back over a fixed period of time in equal monthly installments. So it's your kind of more traditional business loan that you may have heard of.
So, like I said, here's an example of a term loan, and this was a case study of a restaurant that we worked with recently. And they came in asking for a loan amount for $150,000. This restaurant has been open for about 5 years. And they were looking to streamline their operations to enhance service capacity and improve their business outlook. So the loan breakdown was for debt consolidations. They had some business credit cards that they utilized in the past. They wanted to consolidate and break down the high interest rates. They also wanted to use a loan they have a catering aspect to their restaurant, and they needed to acquire a vehicle. So they needed to buy a vehicle. They wanted part of the loan for that. And also a sidewalk cafe construction. A lot of you know about the outdoor dining. They wanted to create a new outdoor dining structure for their business to expand the seating capacity. So we were able to approve a loan for them for $150,000 because they came to us with a detailed, this is what we call use of funds, which is important for us. And they came to us with a detailed use of funds of how they will utilize the entire $150,000 loan.
Yeah. Yeah, absolutely. I don't think I have anything else to add. All right, so now so keep in mind, everything we spoke about previously is our term loans, right? Things that people can really wrap their heads around. Our lending is kind of split down the middle. 50% of our lending is term loans, these very general small business growth loans, inventory, payroll, equipment, working capital. That's kind of 50% of our lending. The other 50% of our lending is that we work with businesses that have contracting opportunities, whether the contracting opportunity is with a local government, a city government, state government, federal government, private entity. We provide contract-based loans to support businesses that are going through contracting opportunities. So the goal of this type of lending is to increase the capacity of MWBE, SDVOB, service disabled veteran-owned businesses, and local contractors to perform and successfully manage cash flow for government and institutional projects. This sounds very open, and it's specifically open because it reaches a bunch of different types of businesses. This can be for catering companies that are working with private corporations to do corporate catering. This is for construction companies. This is for janitorial companies. This is for professional services. This can be for marketing agencies, PR agencies. The list goes on and on. So any type of business that does B2B work or B2G work, business to government work, you'll often be working under these contract constraints, and we can lend against those. We've done, this is, I guess, an old slide at this point, because we've done well over 400 projects at this point. And like I said, a lot of it does take place in the construction industry. But if your business is poised for contracting opportunities, it can definitely be fit your need. So
Brian,
yeah.
I'm sorry. Can you just let everybody know what an MWBE is?
Oh yeah, absolutely. MW/DBE stands for Minority, Women, or Disadvantaged Business Enterprise. That's important to note. We're all based in New York State. That is a certification that can be obtained through different means. Some corporations have their own certification for MWBE, but the most well-known one is New York City and New York State certification, where you can go through a certification process if you're a minority or women-owned business, or a disabled, a disadvantaged business enterprise. You can get your business certified so that you have that certification. It allows you to access contracts that some government agencies are looking for. So that's what MWBE, most well known as MWBE businesses. So contract financing, I'm going to go through it. It's very specific. And I encourage anyone that does have contracting opportunities, if they want to explore this in more detail, it works really well in a one-on-one setting where we can have a conversation about what your contracting opportunity looks like and see what we can do to structure it. So the purpose of contract financing, like I said, is to provide low-cost financing for mobilization and cash flow for New York City funded projects. It doesn't have to be New York City funded projects. It can be any sort of contract. We're a New York City based lender, so that's typically what we end up doing. There's two ways to use this type of financing. If you have a long-term project that you need to get started on, this is predominantly within kind of the construction industry, we can do up to 30% of the value of the contracts to mobilize on that project. So what that means is if you've been awarded $1 million contract, you're going to have to outlay money before you can start billing on the project and receiving money. So it's a loan that's specific to the use of funds or the cost to the business for that project. And we can do 30% of the value of the project cash to the business to get started on it. The other methodology to use this financing is against approved invoices. So as you get into public work or any sort of government contracting or contracting work in general, there's payment terms that are associated with your contract. Sometimes payment terms can be as favorable as net 15, which essentially means that when you submit your invoice to receive payment, you're going to be paid 15 days later. Some contract terms are less favorable, and they might be net 60, where if you submit your invoice for payment, you have to wait 60 days to receive payment. If it's the latter, if you have these long payment gaps, that might be difficult for a small business to weather as you continue working on all the other stuff that you work on a daily basis. So a very popular way of doing contract financing is we can finance 70% of the value of invoices due to your company on a specific project. That allows you to manage cash flow through that project so that you're not at this deficit while you're awaiting that payment. So once again, these two methods of using it are very specific, and they'll look different for each type of contract, whether you're a construction business, a catering company, a janitorial company, whatever. It's all going to look a little bit different. So I always encourage people to reach out to us and we can have a one-on-one just to have an information session to figure out how it would best benefit your business. So the maximum size loan here, we can go up to $500,000 loan per contract. The interest rate is a little bit different because, like I said, we're a New York City based lender. We are sponsored by New York City Small Business Services to subsidize our interest rate to 3% annually on New York City agency projects. So if you're contracted by a New York City agency, you're eligible to receive this very low interest rate at 3%. If it's any other project, state, local municipality, federal government, private corporation, any other contract you have that's not a New York City agency contract, the interest rate ranges between 6 and 10%. Very similar to our term loans, the fees are about 1.5% on funds used. I saw a lot of activity in the chat, but I didn't open it. Should I answer questions now, or should we just wait for the end?
I answered them.
Okay, perfect. Now we're going to get very specific into contract financing, but we find it very valuable to share with small business owners. Contract financing is similar to a line of credit in the sense that you're not making monthly payments on the loan. The loan itself is being repaid as the contract is repaid. So in order to set up that structure where you're not making monthly payments, you're receiving payments when the contract is being repaid, we have to put into place what's called an assignment of payment. So I don't know if anyone here has heard of an assignment of payment before, so I apologize if this is redundant, but I'll go through it. An assignment of payment essentially authorizes all contract payments to be sent directly to the lender. So the way it works is BOC Capital disperses and remits funds to the contractor less the agreed upon amount to repay partial or total loan balances. How does this help the contractor? How does this help the business that's doing contract work? The amount of the loan payment will depend on your cash flow needs and the stage of the project. In no event will the loan balance exceed 70% of the remaining contract value, less retainage, and retainage being a construction word. So essentially what that means is when you've taken out a contract-based loan with BOC Capital, the contract proceeds are assigned directly to us. All payments on that project that normally would be redirected to the business are redirected to BOC Capital first. Once we receive a payment, we have a very short window to alert you that, hey, business owner, we've received a payment for $10,000 for invoice number 1 on project A. We then have a conversation with you to say, do you want to pay your loan down with this $10,000, or are you still working on this project? Do you still have a need for financing on this project? And if so, we can kind of delay the loan payment and just send you that $10,000 back to say, continue working on it. When we get the next invoice, we'll have another conversation. We can pay the loan down there, or we can once again have this conversation about maybe delaying the loan payment. So there's no real hard rule to it. The only hard rule is that the loan balance can't exceed 70% of the contract value. The rest is about working with us and that TA that we spoke about earlier, and looking at cash flow projections and just kind of managing how the project's going. I'll very briefly go over this. This is an assignment of payment form. It's as simple as this. It's a one-page form that essentially gets the contractor to assign payment directly to the lender. So a case study to kind of showcase what contract-based lending has done very recently. We had a cleaning and maintenance company that was a service provider with the New York City Department of Transportation. They ran into this issue where they were working on this project, providing their services. And even though they entered a contract agreement that said they were going to get paid in 30 days after submitting their invoice, it ended up being delayed, and they weren't receiving payment for up to 60 days at a time. So they reached out to us and they essentially said, we're having difficulty managing not being paid for 60 days after we've completed an invoice for the work. So they came to BOC, requested a $50,000 loan to essentially act as a bridge loan to say, while we've done this work, we want to get paid immediately. And then 60 days later, when New York City pays me, we'll pay down the loan. And you'll be able to support my invoices. That in the payroll support, it ensured timely payment to employees while awaiting these invoices. So that's a case study about something that happened very recently. We chose one that obviously wasn't a construction company. This was more of just a service provider.
Ryan, we have a question.
Yeah.
So we want to know, is this how all CDFI community lending works, or is this specifically how BOC works?
It's a good question. So all CDFIs work in different manners is a simple answer. CDFI, like we said, is a designation from the Treasury that says this lender is meeting their target mission. Our target mission is to work with small businesses in the metropolitan New York City area. Contract-based lending, one of the type of loans we do, like I said, about 50% of our lending is pretty specific. There's not many CDFIs that do contract-based lending. We're one of just a handful. Now, if you put aside, so that's a very unique specialized loan product. If you put that aside and look at our term loan lending, loans that go from $500 to $250,000 for the equipment and the payroll and the general working capital, that is pretty similar to how all small business CDFIs operate, right? You submit a loan, and we'll talk about the loan process right now. And this loan process is relatively similar across CDFIs that are small business lenders.
Okay.
Do you have to be a corporation to apply?
No, you don't have to be a corporation. You don't have to be an LLC. You don't have to even have a formal business entity to start working with us. We want to see that you're generating and doing business activity. And we can work with you along the way to get you there. So if you're a sole proprietor that's selling or providing some type of service and you're filing taxes under your social security number on a Schedule C, we will work with you to formalize your business, maybe file for an EIN number, maybe set up an LLC. Our main determinant is that we want to see that there's actual business activity that can be tracked.
We have another question. It says, if you are brand new, how do you prove your cash flow projection, and how new is too new?
Too new. There's never too new. We have going back to Michelle's term of the day, number 2, global debt service coverage ratio. So we are a lender that lends to startup businesses. On our application, there is a very specific question that allows us to do startup businesses. And the question is, has your business been operating for 6 or more months? And by operating, we mean generating revenue. Or is there an outside source of income? So we do a global underwriting to determine the ability for an individual and the business to repay the loan. So if business revenues aren't at a level in which they can repay a loan that's being requested, we can look at any sources of income from the personal side to justify a business loan. So there's nothing is too soon. We work with pre-startup businesses, providing that capital to get started. The way we're able to do it is that term GDSCR, our global underwriting. All right.
Yes, thank you.
Okay. We're gonna go into the loan process. I just wanted to add, just to Ryan's point, that our clients varies. It varies from someone who can be working a 9 to 5 and saying, I sell beauty supplies or skin products on the side, or to the construction companies. So it's from all levels. So just to keep that in mind. So let's kind of go through the loan process. So initially when we get clients, there is, and this goes for term loan and for contract-based loan. There are some things that varies, but I'll get into that. Our initial intake and assessment. So it's the financial and organizational capacity assessment. So we're kind of Ryan just stated it as well. We're just looking at a global cash flow. That's what we're looking at. Your outside income, your business revenue, that's what we're overall looking at on initial intake, and that's what the discussion is about. And during that initial intake, we inform all the clients about the loan process and all the details, how long it will take, what's involved. We go through all the steps during that initial conversation. Then we have the clients that will fill out the loan application as well. Preliminary application with a credit review. We can do it 2 ways. There are times when we ask, we speak with a client, and someone may say, hey, I'm not too sure of what my credit looks like or my credit report looks like. So we can do a soft credit pull. Once you fill out an application and sign an application for us, your credit is automatically pulled, and that's a hard credit pull, right? So if you know the difference between soft credit and hard credit, soft credit does not affect your credit score. A hard credit pull just, affects it, not greatly, but does affect your credit score. Full application package with required documents. We'll get into, I think the next slide talks about the list of documents that we're going to require, the basic documents. We also do a site visit, which is a part of the process as well. If it's a home-based business, then we're obviously not coming to your home, but we will sometimes we'll do Zoom calls, and depending on the industry as well. But if it's restaurant or a store or anything like that, we will definitely come out to the site visit. And we help with the projected cash flow. If it's a contract-based loan, then we review what the bid is, and we review the contract as well. The loan application review decision may take anywhere from 2 to 4 weeks, and we both play a part in that, as far as the borrower and ourselves as well, because we go through an underwriting process. But through the borrower, when we get into asking you for documents, we have clients that will, give you everything overnight. Then we do have clients that may take a while to get some things together. But that's why we are here. We're also here to help, because sometimes people get stuck with, cash flow projections like we talked about, and we're here to help and get you through that hump. Up to 500K, depending on the contract source. That's when you talk, and then we start to talk. Oh, I'm sorry. That goes into the decision time. But if you're going into contract-based loan, Then we confirm the assignment of payment that Ryan just spoke about on the contract-based loan. Then the next step is the final loan approval and the release of funds. So our process goes into, there's two, for a term loan, there's two parts to approval process. We go through an underwriting process, which is a third-party underwriter, and they will look through in order to make sure that there's cash flow. So they'll look through tax returns and bank statements, any outside income, business income, and they will decide yes or no if there's cash flow based on those documents. Then after that, we actually go through a loan committee and present the entire package, which consists of the underwriter's review, consists of the documents that you provided, and our conversations as loan officers that we've had with the business. So the client provides proof of, if it's a contract award, if it's a contract base, client provides proof of contract award in a work schedule. Disbursements and repayments are based on the contract that Ryan just pointed out, and the contract payment assignment is in place prior to disbursement. That goes with the contract-based loans. If it's a term loan, once it's approved, then you will have your closing documents, and then the payment is dispersed.
We do have a question. Are non-personal grantor business structures eligible?
Sorry, say that one more time. Or non what?
Non-personal, sorry if I'm saying this wrong, grantor business structures eligible?
Is it in the chat? Let me...
Grants?
Yeah.
Okay. Guarantor. Yes, but however, so we are predominantly an SBA microlender, and even for loans that fall outside of the SBA microlender means loans up to $50,000. Even loans that fall outside of that SBA microloan size, we typically, all of our loan policies adhere to what the SBA looks for. So essentially what that means is there's two major SBA conditions. One is that there's no prepayment penalty. So if you ever want to pay back a loan back early, there's no extra fees in paying it back early. The second condition is that any individual that owns 20% or more of a company is a personal guarantor on the application itself, even as a small business loan. So I hope that answered your question. And then, yeah, so the loan process itself, we're trying to give you guys as much detail as possible, but in a conversational manner. An application, you set up a meeting with us, we have an informal assessment meeting, you fill out an application, there's a credit check, we gather a bunch of documents that you're going to see on the next page. Once we have all of those documents, it takes us about 2 to 4 weeks for a term loan to get money into your account, if approved. So kind of just sharing the process.
Okay, so here we're going to see a couple of a list of the documents that are required, and this is the application checklist. So as Ryan just stated, anyone who owns 20% or more of the company has to provide these documents as well. So if you have a partnership, yourself and your partner, as long as it's 20 and 20% or more, these documents are required of both yourself and your partner. And the basics are like your photo ID, the resume of principals, home utility bill, recent pay stub, if you have an outside source of income, personal bank statements from yourself. Like I said, if you have a partner, same thing, personal bank statements, 2 years most recent signed personal tax returns, personal financial statement, which is an SBA Form 413, and IRS Form 4506C, a request from tax return transcript. Now, when we send out this checklist and ask you for documents, we are right there with you as far as if you have any issues as getting this information or not clear on what is needed, we are with you every step of the way to answer any questions, to help to guide you, to provide any information. And it's very important when we ask for bank statements that all bank statements are given. Sometimes people will give, I'll just give this bank statement because this is the bank that I use, but I have another bank statement. I have another bank that I use for savings or whatever. Everything that is required, everything that's requested is required.
It is, and I will say it is variable on the loan amount. Did you say that, Michelle?
Oh, I did not say that part. Sorry.
So this would be like pretty much everything we would ask for any size loan. But as you start getting like under 40, under $30,000, some of this gets shaved off. Like we might only need 1 year of tax returns instead of 2. We probably don't need a personal financial statement. It definitely doesn't have to be on an SBA form 413. It can just be kind of something written down, and we can help you develop that. We might not need an IRS form. So this is kind of like, you're coming to us for $250,000. We're letting you know that we would absolutely need all of this stuff. This is on the personal side. So we'll move over to the business side.
Yeah. So on the business side, the things that you're going to need are proof of ownership, your DBA, articles of organization. Borrower resolution form is just a form that we require, but we have the form, and it's just stating that you are willing to borrow money from BOC Capital from CDFI. A business utility bill, if it's different than your home. Read 3 months most recent business bank statements. If you've been in business for, at least 3 months. Sometimes, when we go back to pre-startups and startups, of course, you don't have that. 2 business tax returns, same concept. Year-to-date P&L, recent balance sheet. Those are things that we can assist you with. If you do not have, we can help to walk you through how to get that and how to prepare that. Same thing with the 4506C, request for tax return transcript. Accounts receivable and accounts payable, agent schedule. Some businesses do not have that readily available. Any permits or licenses, some businesses do not have that, right? Depending on the industry. Same thing with your 6 to 12 months cash flow projection. Sources and uses of funds is very important. So it's basically use of funds, right? So going back to when I gave the example of the restaurant that was using the funds for a vehicle and for sidewalk, for a new sidewalk cafe, you would need to come to us with, even if it's $500. I'm requesting $500 to purchase, I know this is not reasonable, but I'm gonna say a new laptop, which probably not, but $1,000 to purchase a new laptop or something like that, right? But you would need to know exactly why you're needing the amount that you're asking for and what you're using it for. Because sometimes you'll have clients that will come and say, hey, I need $10,000. I'll kind of figure out what I'm gonna do, what I'll do with it. I don't know what for sure I'll do with it, but I know I need 10,000. But once we talk to clients and really break it down, what are you utilizing these funds for? It may end up saying, hey, you know what? I really just need 5,000 to do what I need to do. Because we're looking to assist you and to help your business grow and not to put you in greater debt. A lease agreement, if applicable, if you are renting a space or leasing a space, a commercial space, that's what we're going to look at. And proof of collateral, sometime we'll need that, especially like if it's a contract-based loan.
Yeah. So once again, we're kind of giving you everything that we could ask across all loan sizes. For a $10,000 loan, a $20,000 loan, we might not need a super up-to-date balance sheet. We may not have accounts receivable or payable depending on the size of the loan or your industry. You may not have that. And then cash flow projection. So going back to that idea that we're a TA-led lender, you can have a conversation with us, even pre having the idea of what type of financing you want. If you want to just have an exploratory conversation, learn a little bit more about what we offer, start to think about what your sources and uses of funds are, start to put together your cash flow projections to be what they would call loan ready. You can meet with us beforehand and start working on that. with the anticipation of applying for a loan in the future. So this is an example of what a cash flow projection looks like that we would want to see for our lending. And the reason we're not going to go into it in too much detail, I'm not going to do a training on cash flow projections, but I just want to highlight it because oftentimes we'll see people approach us with a cash flow projection that's maybe just an annual breakdown to say through the year, I'm going to do this amount of money in cash received, and I'm going to spend this amount of money in cash. We want to kind of see it broken down on a month by month basis over a 12-month period to really get an understanding of what your business is anticipated to do. It can be a daunting task. We have templates, we have individuals that are experts in this subject matter, and we can assist with putting it together. And doing it as a task or as checking off a box to apply for a loan oftentimes will allow you to have a better sense of what the cash is going to be in your business over the next 12 months. So it's a useful tool. It's kind of a financial model that you can use even outside of a singular independent loan request. So now we talk about a couple tips. This does go a little bit beyond just BOC Capital. We put these slides together really from just our experience, plus sitting on panels with other lenders and knowing other lenders and kind of hearing what they say. So this goes for small nonprofit lenders. This goes for big banks. Just some general tips. So record keeping and on-time tax filings will help make the loan process go much more quickly. That is typically achievable by having the right accountant. So if you know that lenders are typically looking for tax returns, you would then know that it may be difficult to navigate a process if you're behind on your tax filings, right? So now there's many reasons for people to be behind on tax filings. There's extensions that go out to October 15th at the latest. So it's just about being aware and being able to explain any reason as to why you haven't filed taxes. Record keeping as well. Keeping your books up to date is a very tedious task, especially if the small business owner is trying to maintain their QuickBooks or their bookkeeping, their record keeping themselves. But it's imperative to keep it as timely as possible so that a lender can do a realistic assessment of the financial health of your business, right? Make sure to keep personal copies of all materials provided to the lender. You can all, lenders are human. We all work, we all have jobs. Some of these documents, as you can see, there might be 40 documents that are required for a larger loan package. So make sure you keep copies of everything you provide to us so that if something is missed, you can make sure to be able to get it over to a lender. Be direct with a lender. Build trust. If you have issues with credit, if you're behind on your taxes, if you've had revenue losses over a period of time, if you're having trouble with something, be upfront about it in the lending process. The more we know, the more we're able to help you navigate the process. I heard someone say one time that kind of resonated with the group that we're kind of like your attorney. Tell us everything, tell your loan officer everything. And if you tell us everything, we're able to kind of pick and choose what we're able to show to the decision makers. We're better able to address issues that may come up. And then manage your relationship with your lender the way you manage your relationship with an important client. Tips on building a longer term relationship with the lender. So let's say that, you've already taken out a loan, you've gone through the process, you've been provided a loan. We're now talking about the next steps. Stay in touch with us. People feel like they only want to stay in touch with us if there's something wrong that's going wrong. But we're always excited to hear about your successes. The more that we can build a relationship with you, the easier a second loan application is going to be, right? If it's 3 years in the future and you've called me a couple times and you said, you know what, with this restaurant or with this loan, I built out my sidewalk cafe and we increased capacity by 50%. And we've increased revenues by 30%. I'm able to kind of track that and show the impact we've made. So it can typically make a second loan process easier. If there are any delays in payment, call the lender. It's very hard to do anything after the fact. If a payment bounces, if a payment is missed, lenders typically have little recourse. There's processes that take place. There might be credit issues that it affects. But if you call me beforehand, and this is very specific to BOC Capital, if you call BOC Capital beforehand, we can maybe put a hold on your payment and say, okay, listen, if you can't make payment on the 15th, let's give you a 15-day grace period and try and do the first. If you call me after you miss the payment, I have way less flexibility in putting that structure in place. Never allow embarrassment to interfere with communications. We've seen it all. We've seen businesses go through extreme highs. We've seen businesses go through extreme lows. There's no judgment. We just want to get to the point in which we can help you the most. And yeah, I mean, that's kind of the main tips for building a long-term relationship. So I think that's the end. Got a little Q&A slide. If
We do
missed
have
any.
some questions.
All right.
All right. So first, let's go to the chat. I saw one in the chat. Would a nonprofit qualify and meet the criteria for a loan? If so, in your experience, have they been more term loans or contract-based with New York City?
That's a good question. Yes, there are lenders that work with nonprofits. We are not a lender that works with nonprofits. We are a nonprofit lender that exclusively lends to for-profit companies. It's kind of wild to say, but there are lenders in New York City that lend to nonprofit companies. Two of them that pop up in my head is one called True Fund, TRUFUND, and another one is called Nonprofit Finance Fund. These are CDFIs that lend to nonprofits, and they have both products typically. So they can have term loans if a nonprofit is going through a period in which they need a term loan. But I believe their most sought after loan products are the contract-based loans. So as you're receiving government grants, if there's payment delays in receiving those grants, they can typically bridge that gap.
Thank you for that. We also have a couple of questions in the Q&A. Let me just open that up. The first question being, what is a soft credit and a hard credit?
You want to answer that, Michelle?
Sure. So the soft credit pull is so think of it when you're looking for a credit card and and then they say that they're going to pull your credit to see if you're eligible for this card. They're going to do a hard credit pull on your credit report. And that affects your score, not greatly, right? But it does take a percentage off of your credit score when they're pulling that hard credit pull. So that's why sometimes you'll hear people say, don't do multiple credit pulls at the same time, or someone will say, oh, don't do this because I'm doing this at the same time and it's going to hurt my score. A soft credit pull, you'll also see that as well. Sometimes you get these emails where credit card companies are saying, hey, we can just do a soft credit pull to see if you're eligible, and then we'll do a hard credit pull. A soft credit pull is almost just taking a look at it, seeing everything on the credit report without affecting your score. But once you're actually going through the process, then the hard credit pull has to be pulled once you fill out an application for us. Hopefully that helped.
Thank you.
You're
We
welcome.
do have another question. It says, if a person has an established business in another country and wants to start a business in New York, what would they need in order to open an account? And can they utilize any of these services?
What you need to open a business account is a couple things, but one of them is an EIN number, an employee identification number, which is kind of like your social security number for the business. There's a lot of steps. There's a lot of steps you kind of have to go through to set up an account and get an EIN number and formalize your business. Going through those steps would allow you to become eligible to seek financing. We have a sister nonprofit called BOC Network. BOC Network is solely a business TA provider, technical assistance provider. And we have individuals that at that organization that can help you navigate this process from beginning to end. So it's not like a super simple, quick answer. There's probably a lot of steps that have to be done to get to being able to access capital, but you do have access to the services to go through that process.
Yes, we also offer those services at the center. Just to begin, you will have to start your business in New York State, which is where a lot of TA, one-on-one technical assistance will come in handy.
Perfect. Absolutely.
Do we have any more incoming questions? Don't be shy.
It's like Clifton has it. Oh no, sorry.
If you would prefer to use your microphone, you can unmute to ask your question.
Hello, hi. My name is Anila.
Hi, Anila.
Hi. Actually, I miss the meeting, the early meeting, the 7 o'clock one. I just joined at 7:30. So, there's any possibility can I see whole meeting in a recording or somewhere?
We will have the recordings posted on our YouTube channel, which you can find a link to it on our webpage, the same webpage you found to register for tonight.
Okay, good. Okay, thank you so much. And I get all the information as well about the how to apply for the loan and everything. I'm a brand new in the industry. I am just like a 1 years old business in a esthetician, and I am doing business from my home right now. But I want to start a business, rent a space. So I need some financing or something so I can start my business.
Okay. Yeah, so to move into a commercial space is absolutely an eligible use of funds for a loan request. And you're welcome to reach out to either Michelle or I to have a conversation about what an application looks like for that.
Okay. Okay. And I got all those information on YouTube and your website, right?
Correct. And I
Okay,
believe,
good.
Jennifer, you'll share our contact information.
Yes, if you want to just follow up with the email thread of what contact information you would like me to share, I'll send that over with our registrants for tonight.
Okay, perfect.
Sure.
We do have another question. What is the loan application fee?
We have 0 loan application fees. It's free to apply.
Just checking to see if we have any other questions coming in. What common mistakes do you see new small business owners make besides not maintaining good record keeping? And do you have any suggestions?
Joe, you want to give that one a shot?
Oh, well, yeah, I think we both can answer it, right? Because we probably see all kinds of things. Honestly, I see a lot of people there are a lot of new business owners that say they don't believe in business plans or business models. And I'm a big advocate for a business plan because it's not only for, I know, years ago it used to be only for if you're looking for financing, you want to have a business plan, but it's really just getting it out of your head and writing everything down. So I think that's a big mistake that people don't do is write things down. Make sure you have a plan. Make sure you understand how your finances are going to go, how you're going to make money, where are you going to get money from, what are you going to utilize the money for. So it's definitely very, very important to start a business plan, a business model canvas, get some assistance if you can't do it yourself. There's so many aspects, so many resources that can assist you. So I think that's a huge mistake that I see a lot of new business owners make. Ryan, I don't know.
I'll second that. That's a good common mistake. Yeah.
Yeah.
And we do have another question. Do you only charge people after they are approved?
Yeah, so like there's no application fee. So you go through the entire process. At the end of the process, there's two results. It's either an approval or a denial. If approved, when you sign the documents to receive the loan, there is a closing fee of between 1.5 and 2% of the loan amount. And then there's an interest rate that's dependent on the type of loan it is. So yeah, essentially you only pay fees when you're approved for a loan.
Awesome. Thank you. Thank you guys so much for all of this wonderful information tonight. Do we have any more questions come in before we wrap up? We saved some time tonight. Alrighty, I'm going to put the contact information for the Entrepreneurial Assistance Center in the chat. So if you do have any other questions, you can follow up with me and I will send you both Ryan and Michelle's contact information so you can apply for those loans.
Oh, I have one more thing to say.
Yes.
About a mistake. Just when you're able to, just make sure you have a business bank account and a personal bank account. So you're not commingling and you're able to know the difference between what you're spending, what relates to your business and what relates to personal.
Yes, we've seen that a lot, and that's come up with actually hindering people from receiving their MWBE certification.
Absolutely.
All righty. So I thank you again for all of your time this evening. Thank you everybody for participating and asking amazing questions. I will follow up with everyone with the contact information for Ryan and Michelle. And you will see this video posted on our YouTube so that you can come back to it for reference later. I wish everybody has an amazing evening and enjoy your weekend.
Thank you, everyone. Thanks for having us.
Yes, thank you.
Thanks.